Hey traders, it's John Fortune here with this week's Weekly Forex Forecast for the 27th of January to the 31st of January 2020. As always, we're going to start off by looking at the US dollar index and crude oil before running through a number of markets, looking at the key levels of support and resistance in the process. I'm also going to be highlighting some of the targets that we're going to be looking for in this coming week and also for the weeks ahead. So I hope you're having a great weekend. Let's jump over to the charts and see where the money is this week. As always, we're going to start off by looking at the US dollar index. Now we start the week above a key area of broken resistance, looking to turn support at 97.65. If we can get a pullback in this area, any pullback towards this level, we're going to be treating as an opportunity to look for further advances to the upside in the dollar index. And we're going to be looking for further advances up towards the next key area of resistance to the upside in the target set at the 98.17. And if we can get a break through here, we're going to be looking up towards the next key area of resistance to the upside in target 2 at the 98.53. So as you can see, we are currently trending to the upside in the US dollar index, and we go into next week with a bullish bias on the dollar index. Just something to bear in mind with the dollar pairs next week, there is an interest rate decision coming out of the US on Wednesday. So if you are trading the US pairs next week, they are likely to get volatile around 7 to 7:30 p.m. UK time next week. Just bear that in mind if you're trading the dollar pairs. So the next market that we're going to look at is crude oil. Now last week we were looking further declines to the downside, and we did take out the target set from last week at 56.76. So very simply put, going into this week we are looking further declines to the downside in crude oil. If we can get a pullback, and if we can get a pullback towards broken support, turning resistance at 57.46, any pullback in this area is going to give us an opportunity to start to look for bearish setups. And if we get the right kind of bearish setups in this market, we're going to be looking at initiating shorts down towards the next key area of support to the downside of the target set, the 51.22. So the next market that we're going to look at is euro dollar. Now we start the week below a key area of broken support from the past, looking to turn resistance to the 1.10860. Any pullback in this area is going to be viewed as an opportunity to start to look for bearish setups in this market. And we're going to be looking at initiating shorts down towards the next key area of support to the downside of the target set, the 1.0981.
So the next market that we're going to look at is pound dollar. Now we start the week above a key area of broken resistance from the past, looking to turn support at the 1.30130. What you'll note about the pound dollar is that although we are currently trending to the upside in the dollar index, and we go into next week with a near-term bullish bias on the US dollar, we are actually currently structured to the upside in the pound dollar. This actually means that although the dollar is strong, the pound is also quite strong as well, and it's actually relatively stronger than the dollar, even though the dollar is quite strong. So very simply put, going into next week, we're going to be using pound dollar as what we call a plan B currency. It means we start off with a bullish bias on the dollar index. However, if we start to break down below the key area of support in the dollar index and we start to reverse and we start to trend to the downside and the support level fails in the dollar index, then pound dollar will be a currency that we come to on the reverse side, and we can start to look for further advances to the upside, but only if we start to see a failure and a weakening of the dollar index. If the dollar index continues to hold, we'd expect this to be kind of choppy and we would be leaving this. But if we do get a reversal in the dollar index and we start to break to the downside, we will be looking for a pullback in this pair down towards the 1.30130, and any pullback in this area will be viewed as an opportunity to start to look for bullish setups if we get that breaking down. And we're going to be looking in this scenario at initiating longs in pound dollar up towards the next key area of resistance to the upside in the target set at the 1.3320. So just to summarize, we're going to next week with a bullish bias on the dollar index, but if we start to see a reversal in the dollar index, this will be a backup currency that we come to, looking to take advantage of that dollar weakness in this pair to the upside. So the next market that we're going to look at is US dollar Japanese yen. Now last week we highlighted the 109.280 as an area to look for a pullback in US dollar Japanese yen. We did pull back to this level, and now this is going into next week a great place to start to look for those bullish setups. And if we get the right kind of bullish formations and patterns in this area, we're going to be looking at initiating longs up towards the next key area of resistance to the upside in the target set at the 111.03. So the next market we're going to look at is Aussie dollar. Now we start the week below a key area of broken support from the past, already turning resistance once, at the 0.68720. So very simply put, going into next week, we are looking for further declines to the downside in this pair. If we can get a pullback, and as always, if we can come back and retest broken support, turning resistance in this case once again at the 0.68720, this would be the best place to start to look for bearish setups, as this would give us the best risk to reward on the setups. And if we can get a pullback in this market, we're going to be looking at initiating shorts down towards the next key of support to the downside in the target set, the 0.6800. And if we can get a break through here, we're going to be looking down towards the next key of support to the downside in target 2 at the 0.6781. So the next market that we're going to look at is New Zealand dollar. Now we start the week below a key area of broken support from the past, already turning resistance once at the 0.66210. So going into next week, this is now a great place to start to look for bearish setups. And if we get the right kind of bearish setups in this area, we're going to be looking at initiating shorts down towards the next key of support to the downside in the target set at the 0.6576. And if we can get a break through here, we're going to be looking down towards the next key of support to the downside in target 2 at the 0.6541. So the next market that we're going to look at is US dollar Swiss franc. Now last week we highlighted the 0.97280 as an area to look for a pullback towards, and we did come back and test this area. In fact, we turned to the pip at the 0.97280. Very simply put, going into this week, as you know, we are going in with a bullish bias on the dollar index. We're currently structured to the upside, and it looks like we're coming back down to test that key area of broken resistance, turning support. And you'll notice also that we are structured to the downside. This is actually just a big bear flag, what's known as a bear flag in the US dollar Swiss franc. So very similar to the pound dollar, it's telling us the Swiss franc is also quite strong, even though the US dollar is strong. And so going into next week, we are still going to favor long dollar setups, okay, which would not be this going into next week. But again, just like pound dollar, we're going to be using this next week as a plan B currency, a backup currency. If we fail to get that bullish momentum in the dollar index and we start to break down below support and we start to reverse to the downside, this will be the second backup currency we'll come to next week to take advantage of any weakness in the dollar index. And this will be a great place if we do start to break down and we start to get a reversal in the US dollar Swiss franc. This will be a great place going into next week to start to look for bearish setups. And we're going to be looking at initiating shorts down towards the next key of support to the downside in the target set at the 0.9584. So again, in summary, we're focused mainly on dollar strength going into next week. But if we start to fail to the downside and we reverse and we take out some of these key levels of support, then we are going to be looking at the US dollar Swiss franc as a currency to express this weakness if it does materialize against what we are looking for next week in this market, as well as pound dollar. So the next market that we're going to look at is US dollar CAD. Now we start the week having broken above a key area of broken resistance, now looking to turn support at the 1.3080. If we can get a pullback, and as always, preferably if we can come back and retest broken resistance, turning support at the 1.3080, this is going to be a great place going into next week to start to look for those bullish setups. And if we get this pullback and we start to get bullish setups in this area, we start to see reversals to the upside, we're going to be looking at initiating longs up towards the next key of resistance, the upside in the target set, at the 1.3270. And last but not least, we have gold. Now you can see here gold is actually priced in US dollars and it is structured to the upside against the US dollar. So although we have a strong dollar and we actually go into next week with a bullish bias on the dollar index and we're focused primarily on dollar strength setups, we do also have a third plan B market down here in gold. So that will be pound dollar, US dollar, Swiss franc and gold, which we will not look to trade initially while the US dollar index is strong. But should we get a failure to continue in the dollar index, should we break down below the support, and also extremely important, should we reverse the trend in the dollar index, this will give the green light to pound dollar, US dollar, Swiss franc, and we can start to look to trade those in the direction of the trends that they're currently in. So very simply put, in a scenario where we start to get that failure to the downside in the dollar index next week, we'll start to look for any pullback in this area, and this will give us an opportunity to start to look for bullish setups. And very often you might get this actually breaking down before gold moves, so they don't necessarily do it at the same time. So this will be a warning before we actually get any moves to the upside in gold if we start to break down in the dollar index. But if we do get that kind of scenario next week, we're going to be looking at initiating longs in gold up towards the next key area resistance to the upside and the target set at the 1616.70. So just to summarize, guys, we're going to next week with a bullish bias on the US dollar index, but should we start to fail and break those structures and reverse trend to the downside in the dollar index, if we start to get that weakness, we will switch towards US dollar Swiss franc to the downside, pound dollar to the upside, and gold to the upside as our 3 plan B currencies next week. So that is it from me for this week, guys. As always, I hope you enjoyed this video. If you did, please let me know by liking, sharing and subscribing. A big thank you to everyone who does that on a regular basis, and a big thank you to everyone who has subscribed to the channel so far. I want to wish you all a fantastic weekend. I want to wish you all a profitable week next week. The only thing left to say, guys, is take care and don't forget to trade safely.